pits for the rest of the market roundup. Larry Shover and Andrew Keene in Chicago. Our closer, Chris Verone from Strategas, staying with us as well. Andrew, let's start with you. I mean, look, we had 10 days, a good run up here for the Dow. Are we in for a break?
I don't think we're in for a break. We're also looking at the CBOE's volatility index. If we were in for a break, I think we'd see that coming up a little bit higher. The volatility index for March expires next Wednesday. Yes, we got a breather today. 10 straight up days for the Dow. Every good streak must come to an end. But I think the momentum's still going to be to the upside. Next week, we're going to be having the FOMC. We're going to listen to see what Bernanke says. Is he going to take away the punch bowl? Is he going to take his foot off the gas and put it on the brake? Depending on who you ask, I still think this market has ways to go much higher, and it looks like we're going to get bought on any pullback here.
Larry?
Andrew, I can't believe you said that. It's so popular. I think we're so overdue for a break. And Andrew's right. Well, there might be a little bit of room left in this wall of worry to climb. However, what nobody's talking about is that right now the macro environment is failing to impress us. The news headlines really aren't impressing us to the downside or the upside. I think that turns a three-legged stool into a two-legged stool. What has to happen, and what I think will happen, we need to find another metric to carry the day, whether it's up or down.
Do you think we're going to get a correction here? We haven't even tested the opening of the year. I don't think we're going to test opening of the year. That's 10% lower. Yeah, we could go down 3 to 5%, but I think there's a good chance for the rest of the year we don't even test the opening of the year.
We don't
well,
even
Andrew,
test
yeah.
Well, that's a bold statement. Larry, defend it.
Yeah. I'm defending it because my target all along has been 1575 by year end. However, right now I'm in step-aside mode. I'd rather see the next metric catch up. I think we're well overdue for a consolidation phase. I can see the market dropping 5% easily on any one of these moving parts that are among us. Right now, there's nobody's paying attention. Everybody's just fearful. I think we're overdue for a correction.
Yeah, but the point of the matter is that we continue to go higher. They always say never short a dull market. We are in a dull market right now. We grind higher. I agree that we take the escalator up and then we eventually take the elevator down, but I don't think we can correct to the open of the year. Yeah, we might see 3 to 5% to the downside. We might see 1500 again, but I think, as you just said, year-end target's 1575, which is still higher from here. The fact of the matter is it's all supply-demand curve. People want to be in this market. We see the retail customer coming back. If you look at how many accounts are open through Ameritrade, E-Trade, retail consumers coming back, and we just want to move higher.
Chris Verone, that's the million-dollar question as you travel. People want to know where we're going. Can you break the battle there on the floor of Chicago?
What strikes me a little bit here is how Wall Street's the only business I can think of where a 10-day winning streak is a bad thing. If the Yankees won 10 in a row, we'd be saying what a good team they are.
Because they're all paranoid, that's why. Come on.
Right.
It seems to me that still one of the more consensus calls on the street is those looking for that 3 to 5% pullback. And that's not to say it won't happen, but it's always a question of at what level. We think this can continue to work here a little bit, 1590 to 1600. I think is an appropriate level. I also think it's a little interesting to put this into some historical context, that when the Dow, for example, back in 1982 was breaking out of that 20-year range, the fundamentals really weren't supportive. Unemployment was over 10%, GDP was negative. It's never the fundamentals, in my view, that confirm the breakout.
Although our fundamentals compared to that are better than
Certainly
that,
better.
of course.
Certainly better. It's never a perfect fundamental backdrop when you come out of these big multi-decade bases. So I think tactically there's more to go here.
All right, more to go. Sounds like you're taking Andrew Keene's side of things. Sorry, Larry Shover.
That's okay. Step aside. We'll see.
All right, we'll see who's right in time. Larry, thank you so much. Larry Shover and Andrew Keene.